Welcome to Ahead of the Curve. Subscribe now.
Welcome to Ahead of the Curve 1776. It is I again, Mr. Curve, guys. Hope you had a swell weekend. Boy, we have had a litany of things transpire over the last couple days. Wow, the weekend, I could not wait to get to the trading desk for Sunday evening Asian session. It was just absolutely phenomenal to get back to it after the long idled weekend with all the news that occurred. We're definitely going to get into it here. Are we in a cash crunch right now? Are we in a liquidity crisis? And is contagion going to get out of control for these banks? If you're new to the channel, we talk about everything from economic data, monetary policy, politics, market, and trading strategies. So let's get to the markets and let's get to the money. This is the home page here, Ahead of the Curve. Please use the affiliate links at the top. That what keeps the channel paid, as well as check out my videos, guys. These videos are phenomenal. Just recently did those. I'm actually putting out a video earlier than I anticipated, just due to everything going on. Also, check out the featured channels as well, guys. Now let's get to it. So the main thing I want to talk about right now is obviously there's literally a Wikipedia article about this, which is absolutely phenomenal. It kind of helps bring into focus in a more clear and concise manner of what actually occurred. Basically, guys, for lack of a better phrase, we had a lot of banks, or a couple of banks here. I guess there's supposedly going to be like 20 of them from what I'm hearing, but 22 banks had significant exposure basically to the crypto sector. And then, basically ran out of liquidity, guys. Had loans against a lot of that stuff. And then, the Fed had to step in. The Fed did make an announcement yesterday. And then they made another announcement this morning, as well as President Biden made an announcement as well, too. So we had the Secretary of the Treasury, as well as the Chairman of the Federal Reserve, Jerome Powell, actually basically joined together, if you will, and backstop these banks. But guys, I'm not going to lie to you. This is a huge, meteor that just hit us, because when we think about it, my last video, I was anticipating maybe they would raise 25 basis points, maybe 50 basis points. But now at this point, I'm really thinking that they may hold rates. Now, one thing I will get into as well is this. Is that, the Fed can walk and chew bubblegum, guys. What could essentially happen is, they control the markets wholeheartedly. I've contemplated the theory that maybe they'll just, keep rates paused, go, start accommodative stance again, or maybe actually raise the rates. So, the Fed could essentially, basically raise rates and still provide liquidity. Just in the inverse, if they were keeping rates the same and withdrawing liquidity through the asset purchases. So it can definitely work both ways, guys. I think it's not just one set or one size fits all. I do believe that they can take a multi-pronged approach to making sure that they're keeping interest rates higher, as well as providing liquidity. Now, you would think it would be moot, but they have done it before. They probably will do it again. So honestly, I'm still kind of wishy-washy as far as what may occur in a couple weeks from now. So we'll have to see how it transpires. If I had to guess, it probably will continue the rate hikes, and then they probably will either pause or have the next rate hike. But I will tell you what I'm pretty confident in, that this might be one of the last ones for sure. And that's huge, because them coming back and providing liquidity, it's huge, guys. That's what the traders. Well, now, why do you care about this? If you're a trader like me and an institutional investor, this is good news. That means we can actually bank on more liquidity in the markets, more fluidity, more price predictions, and also, it would be basically very volatile for us, and that's good. That's where we make money, from starting from point A to point B. So that is phenomenal. Definitely check out this Wikipedia article, guys. It will go over pretty much what happens in very layman's terms and clear and concise. But why do we care? Because the Fed will provide liquidity, and that's what we trade off of. So let's get you guys over to the Forex market. So we shifted forward with daylight savings time for Canada and the United States today. So the trading servers are kind of off a little bit by an hour. So typically all is well. We just continue on from where we were at before, but basically the trading service is a little different. So as you guys can see here, we had that Fed announcement there, which is huge. Now, what's going to be pivotal tomorrow is the CPI from the U.S. here. We're going to see, if it's going to come in line. Now, if it does come in line with what is expected, it is a softer number or a little bit lower reading on the CPI or inflation reading. So, might actually be in the trader's favor for maybe a 25 basis point rate hike, or not an increase, and also a very dovish statement in press conference. So we could definitely see that happening. Hence why all asset classes that are risk on are definitely shooting up. The dollar had a big day today, lost a lot on the dollar index. I think almost a full point on the dollar index. Safe haven shot up. Gold and silver definitely had their day today, as well as WTI as well. So we shall see, and that's going to be a huge tipping point between the consumer price index as well as the producer price. That's going to be pivotal for us to know for sure what may occur for that interest rate decision. Again, it's a 2-day meeting, and then it's held by a press conference, and then always, this is a little bit of insider information, guys. They typically dump more liquidity into the markets right after the meeting. It's kind of like a reset, if you will. The markets kind of stay on the sidelines for a day or two, and then they come back in full force after the interest rate decision is finalized. Let's get you guys over to the Forex markets here. Just check it out, Euro/US dollar. As you can guys see here, we had a kind of a teetering back and forth here, but then it was a consolidated pattern. Then we kind of did push up in the morning once we get that confirmation that further liquidity will be provided, as well as the joint communique as far as what actually occurred for the FDIC, the Treasury, as well as the Fed. So we definitely pushed up here, guys. Again, them providing that liquidity is phenomenal news for us, because even though the bank sector just in general right now is taking a nosedive, overall we might have a rising tide lifting all boats. Except for possibly the tech sector as well as the banking. So we'll just have to see. Penny stocks are still doing well. A lot of cryptos, guys, have actually bounced back phenomenally off their lows. So we are definitely seeing a pivotal moment in the markets right now. Now let's get you guys over to the metals market. I want to talk about a few things there. I mean, astronomical numbers here, guy. Gold at 19, hanging his hat at 1900. Silver over 2100. I'm sorry, $21 an ounce. Absolutely phenomenal numbers. When you're looking at the trade there, it was phenomenal, as well as platinum as well too. Now they're pulling back right now, a little bit of a sell-off. People taking profits. So we'll definitely have to see how this whole situation, the banks play out. But definitely keep a little cash on hand, guys. Make sure you're doing your due diligence, your homework on all of this stuff, guys. But kind of be diversified. The best person that always does well in the end is the most diversified person that you know of. So be that person that you know of. But like I said, guys, where I see these guys going, definitely going up, guys, because again, they are denominated in US dollars, and with liquidity being provided, that's good news, because then the banks are going to be flush with cash. They're going to probably be trading more. They're going to be overnight lending. They're going to be, parking money at the Treasury. So, and then the Treasuries did pull back as well too, guys. I mean, those definitely, shaved off almost a 0.5% or a full percent. So we're definitely seeing that the market is coming to the realization that the Fed can't be as hawkish as it would like, or the system will probably fail. And I did tell you guys about that in the last video, a possible contagion factor. So yeah, check those guys out. Make sure you let me know in the comments what you guys' thoughts are. Let's get you guys now over to the energies market. Let's see what occurred there for WTI was on its way pulling back. WTI and Brent were on its way pulling back for the trading day, and then basically came out with those statements and shot right up, guys. And then obviously we had a little bit of a sell-off in the afternoon there, but phenomenal numbers, guys. WTI, I don't think out of everything that's priced in US dollars, I don't think it'll probably get higher than maybe $90 per barrel within the next month or so. So we'll have to see how that plays out. Now, I will still do a video on Wednesday, guys, just to kind of harp on what we talked about so far. Hopefully, fingers crossed, another bank does not bite the dust, or we have some type of contagion situation or liquidity crisis. But I hope that is not the case. But I will be here for you for commentary as well as strategies going forward as well too. Let's get you guys now over to cryptos. Let's see how they perform. Cryptos, guys, didn't do too bad. I mean, obviously they definitely pushed up there. I got into XRP. I definitely got into some Bitcoin. I got into some Litecoin. I even got into what's called Froggy. I just liked it because of the name, but it's basically just a meme coin essentially. Virtually all of them are, unless they're actually being transacted heavily as a medium of exchange. But essentially, guys, they are moving up here. Let's just check out the market cap here for the cryptos here. We'll just give it a minute to load here. But Bitcoin obviously will be the reign champ there. We got Ether coming in at about 30%, you know, Dogecoin, Litecoin, etc. But, you know, if you scroll down, guys, and you go over on CryptoCraft, definitely give them a shout, give them a look and a shout out there. But basically, you can really see what's going on there, what occurs there, and actually, you know, the exchanges, because there are several exchanges that still do exist. We got Whitebit there, we got Probit, we got CoinEx, obviously. You know, Coinbase will kind of show up here, here and there. A couple of them have already bit the dust, but again, cryptos I don't believe are going anywhere. What most likely happen is they'll get more regulated over time, but that's neither here nor there. As long as they're priced in US dollars or they're able to be exchanged out or liquidated out, hey, you know, you can definitely do what you want with these guys. I do use them as a medium of exchange. You know, they're great for what they are and intended purpose, even if they are kind of subjective to, you know, probably stringent regulations, being that they are cryptos. But guys, definitely price in US dollars, liquidity being provided could mean that, as you know, we could be going up. But again, certain asset classes will probably not be doing well. Let me say that. Probably banking probably would not be doing well. The housing market probably would not be doing well if they keep those interest rates up, because if you have to borrow that money, you are borrowing on that rate plus whatever they need, plus the, you know, whatever they need to make a profit. So if they're borrowing from the Fed 4 or 5%, they're tagging on another 5, 10, 15%. You know, you would have to pay that. So ultimately, you know, you got to watch out for that. There is a little bit of a risk with this situation. But other than that, guys, let's get you over to the dollar index. Let me show you what how that played out for today. Like expressed in the other charts, we had the dollar strengthening a little bit there, going up, and then obviously after we had several, you know, press conferences, just definitely sold off there, and you know, everything shot to the moon essentially. So all in all, guys, you know, it's definitely the time to possibly. This is the most most versatile time right now. You can hold a little cash on hand. You could, you know, maybe get into some money markets if you want to, you know, keep some cash out at 4 or 5%. You could possibly cherry pick certain stocks, you know, to tailor your portfolio. You could possibly take out some cryptos. And again, guys, this is not investment advice. Please talk to a licensed professional. But again, guys, there's several different things you could do right now, and possibly none of them will be wrong. You just got to look for the next ideas of what possibly can occur, and just stay ahead of the curve. That's all this page is about, guys. Trying to keep you guys in tune of what's going on so you can make the most informed decision for yourself. Let's get you guys over to the stock market, guys, and we'll see what happened in there. So stocks were definitely seesawing back and forth, guys. That VIX number is over that 26, and if you guys remember, anything over 20 is more volatile. Now again, that could be good or bad depending on your trading strategy and your market strategy. But all in all, guys, we kind of had a mixed day on basically relative numbers. We did have a slide off. We were up for a little bit there, and then right before, I'm pretty sure people were taking profits there just to kind of get out and make sure that they're staying liquid. So, and that's another thing too, that's very pivotal. Stay liquid, guys. You want to make sure that you're not, I personally am not going long in this market just because I don't know what's going to happen another 30 to 60 days from now, and we need to kind of get past that point to see the true Fed's hand, whether they're going to keep interest rates high to still provide liquidity, and then possibly slowly taper the rates down, lowering the rates down in a more accommodative stance, or they're just going to keep raising but still provide liquidity because they're trying to control certain asset classes from getting out of control, i.e. banking, housing, you know, certain commodity sectors. And for one thing, guys, I've been doing this for a while, so I will tell you, you need to watch out. There is a chance that the Fed can go into any asset class and buy it down or buy it up. So if they see oil going too high, they can go in there and buy it down. They see their dollar getting too weak, they'll go in there and they'll buy it up. They see the euro getting too strong, they'll go in there and buy. They see certain bonds doing certain things, they'll go in there and they'll fix those. They could perform a yield curve control. They can essentially do whatever they want, guys. They control this. So what you want to do is just be ahead of the curve, stay focused, stay vigilant, and keep your eye on the prize. So basically, guys, we had a crazy day today. I'm not going to lie. I was so So eager to get onto this video for you guys to kind of give you my commentary, because I know you guys love to hear it. I know you guys love to see what my thoughts are. Again, guys, I do this for a living. This is, you know, how I provide, and this is, you know, basically my life, guys. I love this stuff. So let's get you guys over to bar chart. I got a few things to talk about there, and we'll wrap up the video. I'm just going to go off the stock market leaders for today for you guys. Tesla, Nvidia, basically the two heavy hitters are just kind of staying relatively the same, even though, you know, Tesla shaved off about $30 over the last 2 weeks here. I literally watched that, you know, fall. Bank of America lost as well too. We got Charles Schwab Bank. People just sold that off. So I think literally people are just selling off whatever they think, you know, the move would be for the day. And again, it's very smart money that's chasing after this. So once they start to see a decline in there, you'll see people piling in, and then they'll exacerbate it, and then they'll just get out maybe an hour or two before trade, and then they probably got themselves a decent profit. One thing I'm surprised is Meta's actually hanging in there. But all in all, guys, it was a very crazy day. Maybe later in the week we'll go over some penny stocks, because I got a few of those that I'm currently trading right now. They're not doing too bad despite all the turmoil and turbulence going on. But all in all, guys, I appreciate you guys joining me. Please like, comment, share, subscribe. I appreciate it. And we're getting back to life here, guys. Well, I'm starting to get excited. Maybe we're going to have a little bit more liquidity to where, you know, we can make a little bit of money here. But as always, guys, in order to be profitable, one must have the knowledge and insight about the next trader position to stay ahead of the curve. And if there are ads on this video, guys, that's how we, you know, support the channel. Please watch the ads, like, comment, share, subscribe, and I will see you guys on the next video. Happy trading.